China's biggest jobs recruitment websites made its debut on the New York Stock Exchange under the ticker ZPIN. The company raised $76 million in its IPO, and stock began trading at $13.50 per share. Zhaopin is the latest in a string of Chinese tech and internet firms to go public in the U.S. Tracy Tandon has more.
The Beijing-based recruitment firm Zhaopin.com joins a slew of Chinese firms like Weibo, JD.com, and Cheetah Mobile that have listed in the U.S. Based on revenues last year, Zhaopin is the second largest recruitment website in China, connecting millions of Chinese users with job opportunities across the mainland. Founded in 1994, Zhaopin had 74 million registered users last year and posted over 10 million job listings. It's often compared to its rival, 51 Jobs, China's largest recruitment website that went public in the U.S. 10 years ago. Kathleen Smith is a principal of IPO ETF manager Renaissance Capital. Smith says U.S. investors are bullish on Chinese IPOs.
The returns on the Chinese IPOs that have come out in the last year, latest 12 months, have been stronger than the overall U.S. IPO market. For example, the average IPO since a year ago from China is up 50%. And the average IPO of all IPOs is up 25%, so twice the return.
It's not just the returns that are luring investors. With a population of 1.3 billion people and rapid urbanization, U.S. investors are eager to tap into China's massive economy. According to iResearch Consulting Group, 50% of China's population is online, and that number is growing.
U.S. investors are really interested in finding a way to own and participate in the growth in China. I think it's important also to mention that the Chinese companies are somewhat protected by, at least U.S. companies have a disadvantage to operating in China. So U.S. investors, in order to get the China opportunity, have to own Chinese companies.